Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Friday, September 16th. Stocks on Wall Street may give back some of this week's solid gains, but the global equity markets are broadly higher as the world remains focused on Europe. Eurozone finance ministers are meeting in Poland today and tomorrow to try and get a grip on the region's sovereign debt crisis. To underscore the importance of the meeting, U.S. Treasury Secretary Timothy Geithner is attending. He's likely to press policymakers to use the Eurozone's $600 billion rescue fund to fight the crisis more effectively. European officials agreed in July to enhance the power of the fund and provide a second bailout for Greece. The goal of this meeting is to find ways to implement that agreement. However, Finland may stand in the way. That country is demanding collateral from Greece before it agrees to participate in the second bailout.
That dispute between Finland and the rest of the European Union is unlikely to be resolved this weekend. And as doubts about Greece's future have grown, investors have become more concerned about the possibility of a default. If Greece is unable to meet its obligations, it could have a dramatic effect on the big European banks that are heavily exposed to Greek debt. In an effort to ease those tensions, the European Central Bank teamed up with the U.S. Federal Reserve, the Bank of England, Bank of Japan, and the Swiss National Bank yesterday. They agreed to provide additional dollar loans to commercial banks to address liquidity concerns. The move boosted the global equity markets yesterday, and that rally continues throughout most of the world today. Asian stocks finished sharply higher, with Tokyo's Nikkei 225 index up more than 2%. And the major markets across Europe are building on yesterday's big gains as well.
The reaction among currencies and in other asset markets has been more subdued. This morning, the euro is sinking against the U.S. dollar, indicating that despite yesterday's move, investors are still concerned about the region's sovereign debt crisis. Analysts agree that the action by the central banks does provide a needed backstop, but they say it only addresses the symptoms of the disease, which is the long-term solvency problems of many member nations and European lenders. The dollar's relative strength is pushing oil prices modestly lower at the moment. Right now, crude is trading just above $89 a barrel, but gold is rebounding a bit, following a big decline yesterday. The precious metal is now worth about $1,790 an ounce.
On the corporate front, we're keeping an eye on shares of Research in Motion. The maker of the BlackBerry is tumbling more than 20%, after it reported a 59% drop in net income in the latest quarter. Sales of the company's smartphones and tablet computers also came in well below expectations. Meanwhile, Netflix may be in for another rough session after dropping 19% yesterday. It lowered its subscriber forecasts after splitting its video streaming and DVD rental services and raising prices. But one big winner in the tech sector may be Texas Instruments. It's gaining 1.5% after raising its quarterly dividend by 31% to 17 cents a share. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.